Nervous about the volatility of public markets? Looking to invest in Canadian real estate but not finding the right opportunities? Neighborhood holdings may be an option. Nearly 10 years of consistent performance, Neighborhood aims to provide stable income while preserving invested capital, target net yield above 8%. At the heart of the strategy is Neighborhood's mortgage product portfolio of first position 100% residential mortgages across Canada with an average loan to value under 55%. Neighborhood partners with mortgage brokers and financial institutions to support quality borrowers in transition who may not currently qualify for traditional financing and have a temporary need for capital. Neighborhood's portfolio has no exposure to commercial, construction, or bare land properties, is geographically diversified across major urban and suburban centers in Canada. Check out the links in the description or visit neighborhoodholdings.com to view the offering memorandum for investors and advisors or to explore mortgage broker partnership opportunities. This is not advice. Please consult a professional advisor before investing a loonie in any of these investments. Before we get started, I just want to remind everyone that this information discussed today is not intended to be or construed as investment advice. Please consult a professional advisor before putting a loonie in any of these financial markets.
The dirty secret is that no one's ever going to get paid back.
People have the shortest memories when it comes to investment.
We just got to get Keith into Bitcoin.
Hey, there's a bubble.
Welcome back to the Loonie Hour, episode 213. As always, joined by the three amigos. We got the Boomer over in Halifax, Rich Diaz in Montreal. Welcome back to the show, Richard.
I'm ready. My art wall is slowly taking shape, one piece at a time.
Habs are still hot too.
Oh, I don't. I'm trying not to jinx it now. Now we've gone from the other extreme. I was really excited before, and now I'm not going to talk about it so we don't jinx it.
How many games do they have left? 168?
80, 70, 69 games, I think.
Okay.
By the way, I went to my first. I'm a Canucks season ticket holder, but I went to my first game. I went to my first game last night, and I noticed they're not doing land acknowledgements anymore before the puck drop.
Shut up.
I'm actually. That's not a joke. That's actually serious. What's that?
Okay. Wow. Interesting.
And did it start? Did they just simply stop now, or have they done any for this season yet, or is this
no? There's been
at the beginning
none.
Of the season?
There's been none. Well, I asked my other buddy that's season ticket holder. I was like, "Hey, I didn't notice there was no acknowledgement last night." He's like, "Yeah." He's like, "I haven't noticed either. I've been in every game." And I was like, "Yeah." So it was interesting because every game before puck drop last year, they would come on the big jumbotron and have this thing, and they'd say, they would just read out the land acknowledgement. So
is there something that has changed in British Columbia that we should be aware of that you want to share with us?
Yeah, something is shifting. Well, we talked about it, right? I mean, we half jokingly talked about it, but it's becoming obviously very serious, which is to say, the Richmond lands where I grew up, being contested. It's a huge deal. People are upset. And we said, well, listen, as we talked about in the pod, 90% of land in BC is unceded territory, which means there's effectively no treaties in, the lost states, and suggests that this needs to be rectified. At least that's what the courts have ruled. And so you're kind of like, well, what's the next shoe to drop? What is the next land that's going to be sort of tied up in legal dispute? And we found out, as reported on Global News, that the entire city of Kamloops is in litigation right now. The entire city. There's 100,000 people. And the entire resort, the ski resort of Sun Peaks.
Good grief.
I mean, I'm laughing only because it's so absurd, right? Anyways, what's going to happen?
I mean, it's crazy. It's it's the biggest story. David Eby cannot get away from the story. People are pissed.
They've sort of been asking for it now for a decade, to be truthful. I mean, it's just that's the way society has moved. And then for this to happen, they're saying, oh, who could have saw that happening?
Well, Keith, we try to look at it obviously, I'm sure we have our political views, but we try to, if you look at this as apolitical as possible, we all know, the pendulum swings in one direction, and then it eventually swings back in the other direction. I think obviously, I think media and society, the pendulum swung in one direction. I think now we're seeing it. Obviously, where you have multiple municipalities saying we're no longer doing land acknowledgements because it's reached a boiling point, and we're now dealing with the consequences, which is, I think ultimately this is going to get rectified through the court system. It is obviously being disputed, but it could take years, right? And this is the challenge is like if you have lands that are in dispute, how do you put valuations on properties, like fee simple properties, if you get tied up in litigation and you say, well, if I buy this land and then it enters into a legal dispute, am I then stuck with an illiquid asset?
Yes.
Until it, right? And so it has to get effectively rectified through treaties, and someone's going to have to cut the check. I don't think it's going to be the homeowners that cut the check from everything that I'm reading. It's going to be the government. The challenge, of course, which we're going to get into in the pod, is the BC government is already running the largest budget deficit ever recorded. And the federal government just announced their monstrosity of a budget, earlier this week, which we're going to get into on the show. So it's like, I just don't know if there's enough checks that can be stroked to go around to keep everybody happy.
Can I before we
maybe
go
they
on,
can maybe they can tuck in some AI, EV, crypto options underneath the house.
I have a real question before you go on. What does fee simple mean?
It's basically private land. Fee simple. Fee simple titles, like you own the land.
Okay. Is it like a freehold?
It's private ownership.
Okay. Sorry.
It's freehold. Yes. Freehold, okay. Fee simple, interchangeable.
Okay. Thank you. Sorry. Carry on, Keith, with your contributions.
Well, now it's fee complicated. Yeah, now it's fee complicated, I guess, is the. But go on a bit, Steve. Share with us a bit more. I mean, we're in other parts of the country, and we're seeing the news, and obviously we're having a bit of a chat about it. But in your world, obviously, why don't you just share with the audience how big of a deal this is? When the Richmond story happened, it was, okay, it's just for those lads down in that part of the province. Yeah. But now that is propped up in Kelowna, which is a very nice area, of course, of the country. Sorry, Kamloops. And, why don't you just share with everyone how really big of a deal this is?
I just think it's like just adds additional layers of uncertainty, right? Like, how do you deploy capital and make investment decisions if you're not too sure if you even own the land, or if you do own the land, that it just gets tied up in legal dispute. I've done a lot of digging through the banks. The banks right now officially have no public statement. They are not saying yes or no. My understanding is that they will renew mortgages. They haven't officially come out and said we will not stroke new mortgages to new buyers. I think what is likely to happen, though, is just particularly in the lands in Richmond, is when you if the property actually even gets an offer, which is unlikely, don't be surprised if your loan to value comes in a lot lower than you expect. And don't be surprised if the appraisal comes in a lot lower and effectively the banks don't lend you what you think you should get.
Do you think offers, Steve, will come off the table over in Kelowna in the next 48 hours?
I don't think there's any. Well, yeah. I mean, I think there's a lot of people that probably aren't even aware, but I mean, obviously it's just circulating in the media now, and I'm sure it's going to take off. But yes, I think it will give people pause and uncertainty. I'm having clients, some of them that are lawyers, reaching out and saying, but I'm looking into this further. I don't even know, like, if my house is safe somewhere else in the Lower Mainland. I've looked it up, and like, this used to be occupied by this this First Nation band and that First Nation band. And it's like, well, maybe they put in a claim. So anyways, it's just kind of like expand. It just has the possibility to get a lot more complicated. And so, like, the banks, again, think about it from the bank's perspective, is they don't want to come out and say, we will not lend on any of this land.
No, of course.
In this area, because it's just bad publicity, right? Like, you're going to have a whole bunch of people protesting outside your branches saying, oh, you're anti-reconciliation, let's boycott this big bank. So, like, as of right now, the banks are like, hush, hush. They are not saying anything. But again, I don't even think it necessarily matters. I think what we know is, we've talked to the private lenders on the show, which is to say, like, they aren't lending there. So, yeah, I don't want to beat a dead horse here. I think it's a big story that we'll continue to monitor. The funniest thing of all this is that Parliament Hill in Ottawa is technically on unceded territory.
Come on. Are you serious?
It's true. Yeah.
Well, they got their just desserts, is what I have to say.
So what's interesting with this, though, and this will carry over into our next conversation, is, so Steve, you just laid out this situation where really effectively the private market will decide to, hey, we're not making any decisions in this market for a while. And this market happens to be the real estate market in Kelowna and in Richmond, of course, as well as now other places in the province. So take that mindset and carry that to all of Canada. In that, as a private investor, if you're, a European fund or, some dude over in Asia or South America, the US, and you're trying to decide whether you want to allocate 50, 100, 200 million to a project in Canada, you're looking at this happening and you're thinking, oh, well, I'm going to step back here for a second and just wait. Because again, it demonstrates that we talked before about how China has a closed capital account. Rich, what does that mean?
It means you can't take money out of the country, basically. Well, legally anyway.
Yeah, absolutely. Remember the movie Moneyball? Remember Brad Short?
I love that movie.
Brad Pitt. He pointed to the guy at the table to, hey, it's your turn to speak. That's what I just did. But my point is that as a private investor, if you have you don't mind taking business risk and market risk, that's fine. That's what you're going to get paid for doing. But if there's any probability whatsoever that you have to take on this other weird risk that's happening, that you may not even be able to sell your investment at the end of the day, that puts a bit of a dent in foreign confidence in Canada. So these are the things that my world would look at with what's happening in BC. A lot of people say, well, it only applies to BC and whatever. It doesn't matter. It's just creating this really weird scenario that's not existing as much elsewhere, is my understanding.
So just keep in mind what I've told you about all this, the First Nations land claims and disputes. This is coming at a time when all the governments are talking about, oh, we need to make historic investments. We need to build Canada strong. So to now layer in this complication is just really poor timing. To try to go out there and attract private capital to invest when you're not even too sure about how this is all going to play out and the implications. We've looked at the housing data. We had just had the month of October housing data come out here in Greater Vancouver. Home sales fell again in October, so down 14% on a year-over-year basis. Well below long-term averages, inventory higher, prices lower. The home price index is down 3.5% on a year-over-year basis. Still decline. I think they declined 0.9% on a month-over-month basis. So keep in mind that home price index is kind of I don't think it's truly capturing the state of the market. So the housing market in Greater Vancouver area, Lower Mainland, is still very weak. There is not really any signs that things are turning around at the moment. I'm still seeing downwards pressure on prices. And it's the same story in the GTA, which, again, I argue is the eye of the storm. If you look at the GTA, Keith, you had the third slowest October home sales in Toronto since 2010. So third slowest. You had the second highest number of new listings for the month of October. And as it stands today, so you have new listings, then you have active inventory. So how much inventory is currently on the market for sale? You have a record high number of listings in the Toronto Real Estate Board for the month of October. So it's highest ever by a very large margin. And of course, prices down 7% from last year.
Steve, everyone's going to Montreal.
Montreal. Sure, we got to pull up. Someone's got to pull up the Montreal home stats.
I'm doing it right now. Everybody, buckle up. Richard's going to talk housing. Actually, a friend of the show, I think his name is Hanif. He's a great follow on Twitter. He's got a great website. We're giving him a free plug. Hanif Bayat, and he does lots of good stuff on personal finance and whatever.
Wow.
And his website's amazing. Yeah, I think it's called, what was it? Wawa?
Wawa.
WOWA. Yeah, great website. Loads of information. But anyway, the average house price in Canada sold at in Montreal sold at an all-time high in September. That's good. Montreal home sales were up 10% year over year to 3,500. How do you like them apples, Steve?
It must be all the Habs fans.
It's all the Habs. I knew it was correlated.
They're fleeing the Leafs and heading over to Montreal.
Correlation is not causation. Let's just get that down. But what is the reason for that then? Why is Montreal doing better?
Well, Rich, I would say this. I'd probably put an asterisk on that to say like you probably have a 1 month bounce there, which is to say like I think the trend across basically every major metro in Canada is weaker sales, higher listings.
Yeah.
Obviously, again, there's markets that are worse than others. We highlight Vancouver and Toronto as the two big obvious ones that are going through sharp corrections. I think the best performing market in Canada is still like Saskatoon.
What about Red Deer?
Saskatchewan, noted again. There we go.
Ryan from Red Deer.
Anyways,
okay. So what else we got? What else we have going on this week?
Well, I flagged U.S. housing in our conversation as well
because it's really important to the U.S. economy.
I think we really like to beat up on Canadian housing. Obviously, valuations were far more stretched than our neighbors to the south, but U.S. housing is in a world of problems too. So as of right now, this is per Redfin. U.S. home sales are tracking to have their weakest year, so not weakest month. They're on track to have their weakest year since 1995 for total home sales. So if you look, you sort of siphon through all the data and the news articles. I mean, the U.S. housing market is not doing well.
So the absolute number of wholesales is lower now than it was in 95. Is that what you just said?
It's on track. Yeah. So U.S. home sales are on track to finish the year based on Redfin and their modeling that it will be the fewest number of home sales in the United States since 1995.
It's crazy. But what's weird about that is that the Case-Shiller home price index is still slightly positive at 1.5%. Is that because it's just like such a wide swath?
I think a lot of that becomes noise. I think it's just hard to capture like fast changing markets. It's hard to capture in a smoothed out, hedonically adjusted index.
Okay.
And that's where I flagged like Vancouver, right? Like home price index down 3.5%. I mean, that is just not reflective of market conditions. I would tell you the most homes or condos are selling 10% lower than they were last year, not 3.5, as a rule of thumb. So I just don't think it's fully capturing the extent of the correction. I'm sure
I think New York housing will start to surge now.
We'll get into that. Keith, you also flagged the US dollar. Do you have any quick comments on there before we shift gears to the federal budget?
Yeah, I mean, so I think what was it 3-5 weeks ago? We're suggesting then that I think I outright said that euro had hit a high. I think around 118 something at that point. And really since then the US dollar has slowly just started, it's like a snowball going down a hill. It gets bigger and bigger and faster and faster. And, we call it a wrecking ball for a reason. So the stronger the US dollar becomes, it tends to, smash everything else around the world into bits and pieces. So we haven't hit that smashing level yet. But as the US dollar gets stronger and stronger, it's effectively sucking capital from elsewhere. So, I mean, over the last few days, close your ears, Rich, but I think the stock market is down 3% or something from its high.
We're underweight. I think this is a good thing.
people are like, oh wow, it's pretty crazy. I know the crypto world is off a bit.
How dare you? How dare you?
Yeah, and like everything is
crypto.
But everything is sort of going in that direction now. So remember, gold was very strong, and that's telling us something. And now that, hey, the dollar is now starting to appreciate as well. And gold is off a little bit, but not a lot. Like it's still hanging around up there at its all-time high. So like the strongest market signal you can ever get in your lifetime is both gold and the dollar, US dollar, appreciating at the same time. That tells you something really weird is going on. And so, we continue to go down that path. And hey, now like the US is weakening. I don't know if we have time right now, but European data came out again this week, incredibly weak as well. And, all that stuff keeps going in that direction.
Yeah. So we'll touch on that probably towards the back half of the show here. But we do have a special guest for this week. Obviously, the much anticipated federal budget, to Keith's dismay, they did finally release the budget. And yeah, there's so much to talk through. And we ultimately wanted to bring somebody on with, a bit of expertise as well that can sort of chime in and share some insights. So we have special guest this week is Sean Speer. Sean is a Canadian academic, commentator, and public policy analyst. He's a senior fellow at the University of Toronto's Monk School of Global Affairs and Public Policy. He's a fellow in the Strategic Competitiveness of the Public Policy Forum, an editor-at-large at The Hub, and a regular contributor to the National Post. So without further ado, let's bring Sean in to this week's discussion. Sean, welcome to the Loonie Hour.
Yeah, great to join you guys. Thanks for having me.
It's been long overdue, but when I read your bio, I thought I was right, but just to reiterate here, you actually founded, or at least co-founded the Hub. So for any of our listeners that haven't read it.
Yeah, 5 years ago, this year, Roger Griffiths and I launched the Hub. You can find us at thehub.ca. We publish a combination of opinion commentary, standard reporting, and a series of podcasts focused on Canadian policy and politics. It's been a wild ride. We've learned a lot. I still have a hard time thinking of myself as an entrepreneur. But here I am, and of course I've been a big fan of Loonie Hour from afar for a long time. So it's great to talk to you guys, particularly about Mark Carney's first budget, which I know people have been waiting for some time, in part because of the expectations that him and the government set for it.
Yeah.
Who's your favorite Loonie Hour personality?
I worked in politics, Keith, before I launched the Hub, so I'm smart enough to not answer a question like that.
Smart.
It's usually Rich. People usually say Rich, and Steve and I are tied for fourth, I think, as we go with it.
Sean, high level, the budget came in, I guess the budget deficit came in a little bit lower than anticipated. I kind of wonder too, like obviously Carney being a former central banker, if he almost intentionally floated the number of 100 billion out to sort of the media and to sort of temper markets expectations. And, and it comes in obviously a little bit lighter, just under 80 billion, I believe. So markets, the bond market anyways was relatively unscathed.
Yeah. Although guys, I worry a little bit about the numbers. My sense is that the risk is to the downside. One of the things that surprised me the most about the government's bottom line is projections on the revenue side of the ledger actually look pretty positive. Revenue set to grow over the coming years, such that the increase in the deficit from roughly 40 billion last year to almost 80 billion this year is purely driven by spending choices. It is not in any way a function of changing revenue projections. The reason I say that it leads me to worry about the downside risk is you guys know what we're going through right now. The economy is teetering on a recession. Unemployment's up. We're seeing decline in investor and consumer confidence. Revenues are, as you know, a function of economic activity. And so in that sense, when we get an economic update at some point in the coming months, I wouldn't be surprised to see those revenue projections fall and that deficit number tick up by some amount.
There's an interesting sorry to chime in here, Rich.
No, go.
I don't know if you noticed this. I just saw it. I mean, Twitter's so good for this stuff, but They had a pretty noticeable increase in employment insurance. EI payouts were projected to rise every single year through 2030. I don't know if you noticed that, but I mean, you kind of wonder, like, what is the government ultimately telling you if they expect EI to increase every single year? Are they effectively forecasting that the labor market is just going to be soft for the next 3, 4, 5 years?
Yeah, I mean, I think one of the challenges, of course, with producing a budget in a period of uncertainty like this, and I should say in parentheses, in a previous life, I worked on several federal budgets from 2009 to roughly 2015 in a minority context and in a majority one. Because, of course, so much of revenue and government expenditure are a function of economic developments, this must have been a really difficult one for the government to square. But I mentioned the revenue point only because it strikes me as so counterintuitive. We publish at the Hub some analysis in the lead up to the budget by Lakehead University economist Livio De Matteo that just looked at a normal rule of thumb for changes in economic activity and the impact on revenue. And he was projecting that revenue could drop as much as $10 or $12 billion on average per year relative to last year's fall economic statement. So when I opened the budget this week and saw revenues aren't falling, actually revenues are growing in spite of some of the other signals in the budget that suggests a deteriorating economy. It's why I come back to my point. I wonder, guys, I'm not accusing the government of cooking the books by any means, but I wonder if those revenue numbers start to weaken in the coming months, such that whenever we close the books on this fiscal year, that $80 billion deficit is pushed up, maybe closer to what we were talking about in the lead up to the budget.
And I think, just to be clear, I mean, the books haven't been, am I right in saying the books have not been closed on the 24-25 tax year yet? So that $40 billion deficit, it could be that number or different. But in line with that, Sean, with the revenue side. So for everyone listening, when you say revenue, that's tax revenue coming in. So I think it's about 50% of tax revenues are individual income taxes. And then the other 50 comes from the other sides, of course. But if you look at the GDP estimates they're using for the next 5 years, so they range from around 1.6, 1.5, up to almost 2%. So I mean that they're basically forecasting a very stable economic period for the next 5 years. And, maybe they can do it, but if Canada achieves that, it means also the Americans are achieving it, the Brits, the French, the Germans, Japanese, everyone else in the world is doing that as well. So there are a lot of things that can happen that will likely make that sort of consistent growth not happen. And I think if you go back to any other budget that's ever come out, and it doesn't matter if they're in a red shirt or blue shirt, the forecast is always amazing, is always a very stable line. And then you get reality. It's kind of like you plan for your hockey game, Rich, and you have what you plan to do, and then you hit reality, and it doesn't go the same way.
Punched in the mouth.
Yeah, and I think, as Steve pointed out as well, there were some inconsistencies built into the budget. And the great thing, though, about the world today, there's a lot more than 2 or 3 media companies and young guys with a pencil that are figuring this out. So, I think Canada is going to have a lot of data coming out. It will be followed very closely. And the good news is we'll get to see it in the financial markets in real time to point us in whether success is or not.
Yeah, brilliant insight. If I can just seize on Keith's point, guys, because it's not just that the numbers may evolve over time. They're evolving in real time. In November 2024, we had the last economic statement from the government because, as you know, because of election cycles and so on, we didn't get a budget in the first couple quarters of this year. Last year's fall economic statement projected real GDP growth of 1.9% in 2025 and 2.1% in 2026. This week's budget revised down those numbers from 1.9 to now 1.1 in 2025, and from 2.1 in 2026 to 1.2% this year. So in spite of that, in light of that, basically cutting growth projections in half, one would have anticipated revenues to fall. Instead, they're growing. The budget attribute that to higher than projected or higher than anticipated corporate tax revenues. I don't know if that's a function of decisions companies are making on when to attribute different revenues to different time periods or whatever. But I I come back to my point, and we can get into some of the particular measures of the budget and what it tells us about Mark Carney's economic philosophy and all the rest. But just as a first order, how should we understand the budget? Where does the risk lie? I really do think it is on downward when it comes to government revenue.
So my question is a bit so related to that government revenue piece is the interest payments piece. It's something we've talked a lot about, which is the fact that right now interest payments are higher than health transfers. I think interest payments are projected to rise to 76 billion. Again, that's if you get everything working in your favor, which is you have interest rates stay low, et cetera. And as you mentioned, budgets don't rise further. Is that something that you guys have paid attention to? Is that something that worries you, that in a world of rising yield curve and higher debts, this idea of constantly refinancing a lower rate fundamentally changes how these budgets should be forecasted out?
Yeah. There would be some who would argue, Rich, that as a share of revenue, government debt charges are still low relative to, say, they were in the 1990s. I think over the course of the budget period, they tick up to something like 12 or 13 cents of every dollar. In the mid-90s, it was closer to 30 cents. So in that sense, we're not in a fiscal crisis. But not only is there the uncertainty around yields and costs of borrowing in a complicated global marketplace, there's also the opportunity cost, right? Like when government is going to borrow dollars in order to quote unquote invest in some project, the true cost of the project or the economic upside from that project has to internalize the borrowing costs as well. And I guess at like a fundamental level, that would be one of my main critiques of the Carney budget. The government is reframing conventional government spending as investment, and investment isn't just political lexicon. It has a meaning, right? It has a definition. An investment comes with a rate of return. That rate of return has to exceed the cost of capital itself. And given the rise in borrowing costs that we're seeing play out, and given the significant increase in the share of the budget going to debt servicing, as I say, about 12 or 13 cents of every dollar, up from about 7 cents not that long ago, it's hard to see how some of this government spending reframed as investment is going to have a rate of return where 5, 10, 15 years from now, you can say that borrowing was ultimately worth it.
So just one more question, I'll pass it on to Steve. So on that exact point, I mean, if you look at TD's done a really good job at like breaking it down. They say about 100 billion of the new 141 spending is actually for higher defense spending. So, you're almost defense spending doesn't in and of itself have a quote unquote return on investment. Now, you could make the case that for years and years we've underfunded our military and we should in principle be contributing to that, but almost by definition buying bullets and butter and guns doesn't have a return on investment. And so just to provide some more context, I mean, is that something you think about? Because a big chunk of it is defense spending to defend Mark Carney's decisions to blow out the deficit.
Yeah, one way I've been trying to think about it, guys, for the past 48 hours or so, I'd be interested in the way you're thinking about it, is this year's projected deficit is up by something like $40 billion relative to last year, almost a doubling. And as we've been discussing, revenue itself is not part of that equation because revenues are holding firm. So that incremental $40 billion deficit is being driven by spending choices on the part of the Prime Minister and his government. Say a third of that or even half is defense spending. I think most people could agree that Canada was a laggard when it came to defense spending, that we needed to get it up to, if nothing else, meet our NATO commitment, to say nothing of a more complicated geopolitical and security environment. We can have a separate conversation about how we ought to be spending that money, what is Canada's comparative advantage when it comes to collective defense. But I don't think you'll find a lot of people critical of the increase in defense spending. But that still means that something like half or 2/3 of the incremental spend is non-defense related. And I think that gets at this point about what Mark Carney's political or economic philosophy is. I know listening to Loonie Hour, you guys are inclined towards an economic worldview whereby government gets out of the way by and large and lets invest private capital and private businesses make decisions according to market forces. Mark Carney's philosophy, I think, as articulated in this budget, is a bit different. It has a theory of the case, if I can put it that way, about a role of government, quote unquote, investing in public infrastructure or putting forward incentives and other measures to try to, quote unquote, catalyze private investment. It is a more state-centric understanding of how the economy works, and that the bet he's making is that the government can roll these dollars out, significant ones, efficiently with minimal distortion and catalyze macroeconomic activity such that people feel better about their own economic circumstances. I think that's a pretty big bet, but I think in a way that's the proper way to understand this week's budget.
There's a couple of things I want to kind of get through as well. I mean, there's so much, obviously it's just, huge budget, but I guess three things that kind of stand out to me is you've got some updates on population growth, immigration. You've got some updates, of course, a little bit of stuff on housing, but more importantly, the big one, of course, is our natural resource sector. There's a lot of things that the private sector was looking for in that budget. So I want to circle back to that. But did you look at the population growth, immigration stuff that came out? I mean, ultimately, like if you kind of read the wording there, it seems like he kind of threw his predecessor there, Trudeau, under the bus, which is effectively said that we need to get our reins back on immigration. And it was between 26 and 28, officials are targeting 380,000 permanent resident admissions for each year. That's down from 395,000 in 2025. But I think Trudeau had previously targeted 500,000. And a large cut, most importantly, in temporary resident admissions, which would see a target of 385,000 in 26. And there's, I think right now, year to date, we've had about nearly 680,000 temporary resident admissions. So it's like effectively getting cut in half.
Yeah, one way to think about it, guys, is he's trying to essentially whitewash the Trudeau era out of our immigration history. This restores Canada's immigration targets to something resembling the ones set out by the Harper government, roughly a decade ago. We could have an interesting conversation of what that means for our society and our culture and all the rest, but it has significant economic implications. I think it's fair to say in the past few years, were it not for Ottawa's deficit spending and extraordinary immigration levels that far exceeded the historical norm, there's a reasonable chance that our economy would have been in recession or close to it. Those two drivers were playing a huge role in eking out the limited economic output or economic growth that we've experienced. So now, as you essentially unwind that extraordinary immigration from our economy, I think that's an underrated part of the drop in real GDP projections. Yes, of course, Trump's tariffs and economic uncertainty and all the rest are a big part of it. But I don't think we should underestimate the disproportionate role that large-scale, extraordinary immigration levels were playing in sustaining economic growth in recent years.
I think, though, I mean, that's part of the main point to look at. I know the current government are saying, hey, don't compare us to the previous governments that we had. It's a different environment and stuff like that. But more or less, Sean and Steve, you guys are correct in that the primary drivers of economic growth in Canada over the last decade has been population growth. And Steve, close your ears, housing. And that's what.
I mean, they're correlated, of course.
Yeah, absolutely. If you get more and more people coming in, there's increased demand for inelastic, market, which is housing, and the demand for healthcare and education and all that stuff. So if the population growth story is basically over and it's going to become relatively muted,
yes,
and then economic estimates that we already mentioned, call it between 1.5 or 1.2, I think, up to as high as 2% over each of the next 5 years. The question then comes, where is the growth going to come from? And I think, Rich, that you've been on this story for such a long time. One of Canada's competitive or comparative advantages relative to the rest of the world is the energy sector. So why don't we move next to some of the big changes?
We're
Yeah.
gonna get to that, but before we get into that, I just wanted to tie into the last bit of immigration stuff, because I think that kind of ties into housing, right? Which we know housing isn't going to be driving growth here over the next couple of years. So it seems to me, when I look at it from a housing guy, there is nothing really in this budget really for housing. I mean, there was certainly nothing on the demand side stimulus. You know, we're so used to governments coming in and trying to stimulate housing demand. And there was, from what I'm seeing, there's nothing in there that stimulates housing demand, which I think is ultimately a good thing. But it seems to me like they're almost saying, listen, like, we're just going to throttle immigration back to levels that are sustainable to effectively allow the housing market to catch up. And that seems to be sort of their play. It's like, I know I look at like Build Canada Homes. I question how successful that program is going to be. They did not introduce the MERB program, which was the multi-unit residential building, which is effectively a tax scheme for people to build rental housing. Was there anything that you took away there from on the housing file? Because I don't really see anything.
I think your analysis is spot on. That for the past several years, the federal government and various provinces have told us that we could have both, that we could continue to have high levels of immigration, and the way we would solve for the growing demand in the marketplace is that we would build homes at a rate that we hadn't before, or we certainly hadn't in years. And I think after having said that for several years, there's a kind of implicit admission that we're not going to push home building or home supply up to 500,000 units per year. That's just not going to happen. And in fact, we're barely going to get to the 250,000 or whatever it is that the government aspires to do.
I think it's going to be way lower. Personally, I think it's what's happening in the GTA and even in Vancouver here. I mean, the development sector is on life support.
Yes, and so as a result, the government is saying, okay, fine, we're not going to do this on the supply side. The only way we're going to get supply and demand into something approximating an equilibrium is if we accept that we're going to have to lower demand. And I think that's a more realistic way to think about this issue than we've seen in some time. And I wouldn't underestimate how difficult this choice is. The immigration issue was a defining one for the Trudeau government. Even though it is a quote-unquote new government, there's still a lot of the same personnel on the front benches. And so the Carney government's significant shift on immigration represents one of these instances where he has done something like a 180 from his predecessor.
Sean, I have a quick last question for you before we switch over to the energy sector, which I'll let you chime in here. But I noticed that they're allocating roughly another $20 billion over the next 10 years in new money to effectively fund local infrastructure. I'm not sure if you saw that or are aware of that, but I was just kind of curious if you could put into context. Like, I know the feds, transfer funds effectively to the provinces to help the municipalities for local infrastructure. When we talk about building, multiplex housing and all this, freeing up zoning. And so from what I read, it looks like the Carney government saying, listen, we're going to transfer an additional $20 billion and it'll be sort of contingent on cities lowering or at least capping development fees and charges. Is $20 billion... Is that actually a significant number, or is that like a drop in the bucket? I don't know if you have any context on that.
We're speaking on November 6th. I just participated earlier today on an online event with the Canadian Urban Institute where they had representatives from different municipalities who were asking this precise question. I think from their point of view, some of this is recycled money. It's not new money. There's some questions about that. But it does raise some pretty fundamental ones, guys, about how our federalism operates. I know that that people are unhappy with provincial and municipal policy with respect to the marketplace for new housing construction, the stringent zoning rules, the over-reliance on development charges, and the cost that they represent for new builds. I share all of those concerns. But as like a kind of first principles point of view, I have some apprehension about Ottawa using the federal spending power to basically go in and impose on other orders of government its own preferences on how municipal policy should look. Like if the city of Stratford or the city of Montreal or the city of Vancouver, the city of Halifax wants to have crummy zoning laws and crummy development charges, that's up to the citizens in those places, it seems to me, to mobilize and challenge their governments, not for Ottawa to say we know precisely what the zoning regime ought to be in those different places. It doesn't in any way diminish the extent to which government policy is the major impediment to more housing supply. But just as a kind of philosophical matter, I'm averse to the type of fiscal federalism we've had over the past 10 years. I mean, if you think about it, Ottawa is increasingly populated by politicians who, if you didn't know any better, really aspire to be provincial premiers or local mayors. Think about the Trudeau government's major accomplishments: pharmacare, dental care, childcare, healthcare, social housing. What don't I have on the list? All of the things for which Ottawa is responsible. And so in that sense, reasonable people can agree or disagree, but just as a kind of like first principles matter, I would like my federal politicians to be focused on the stuff Ottawa is responsible for and leave it to provincial premiers and local mayors to concern themselves with what their orders of government ought to be focused on.
It's funny that you brought that up, because the BC government effectively imposed multiplex zoning throughout the province, which at the time I was kind of like, I don't know if that's like the worst thing. I'd say it's a very bold action, but I think we're starting to see now the blowback from all these local governments saying, listen, our constituents don't want this, or they don't want the scale that you're imposing. And so I think it's just interesting to sort of see like that political landscape that, to try to get three levels of government on side in agreement, it's basically impossible.
Yeah.
Sean, before I dive coughing here, I just wanted to jump in and talk about that, because you mentioned that the federal government's basically just done overreach across the board. And in two sections I thought were interesting was, one, cutting the public sector jobs, right? There's a whole chart basically that shows they're going to curb public sector jobs. And then there's another section that says they're going to cut back on direct. Now, it's not going to go to zero, which is a mistake people have made, but it is going to realign activities towards core federal mandate. Number one, do you think that there's a recognition that there's a lot of pork barrel spending in Ottawa that they just fundamentally don't need? And then the second thing is, do you believe them when it comes to public sector job cuts?
Yeah, it was just a couple of points. First, direct program spending basically doubled over the past decade. The federal public service added 110,000 jobs. So if the Carney government fulfills its target of 40,000 job cuts, think of it as about a 40-ish% reduction in the increase that we saw over the past decade. The $13 billion or so in annual savings it aims to achieve by 2029 similarly represents about 10 or so percent of the spending growth that we've seen over the past decade. So there's certainly a recognition, and the Prime Minister, to his credit, has said the government has simply been growing too fast for too long, and he should be credited for that. But, and this is the big but, I come back to the point, Steve so insightfully raised concerns around the Build Canada Homes initiative, which is really I think it's fair to say, the Carney government's signature housing initiative. They presented that as a alternative to some of the other proposals on offer, including offering tax reductions on the GST, HST for new homes, and so on. And here we are months into the administration, and Build Canada Homes is still mostly an exercise in theory. It has a CEO, it has a white paper, but it is hard to see how the government is going to stand up a new entity that is going to make a meaningful difference when it comes to housing supply in the country for the next, 18 months, 24 months, just knowing how these things go. And so I would say that in some ways, the Carney government's biggest economic and political threat is its own technocratic predispositions. I know you guys want to talk about energy and natural resources. It applies here too, right? The government rightly diagnoses the problem when it comes to the slow and cumbersome process for permitting and regulatory and regulations of major projects. I think the logical solution would be to streamline and liberalize that regime. Instead, the government creates a parallel one under Bill C-5 that enables projects that are politically selected to go through a more expedited and streamlined process, as opposed to fundamentally reforming the entire process and leaving it to investors and markets to decide which projects ultimately move forward. So it's a long way in saying, guys, that I think if you were looking at this, the glass is half full. This is a budget that diagnoses the problems closer to the truth than the Trudeau government. I note, for instance, it refers to productivity 131 times. That represents a departure from the past decade. Its focus on Canada's core macroeconomic issues, slow growth, low productivity, declining living standards, as opposed to the Trudeau government's emphasis on equity, redistribution, growing the economy from the heart out, as our previous prime minister put it. But as good as those diagnoses are, I think that the prime minister's technocratic predisposition and the way that he's trying to solve these issues through government action represents the biggest break on the progress that he and his government are hoping to achieve.
I mean, we're all pussyfooting around the obvious thing, though, in a way, which is that climate has captured the federal government for years, and their inability or unwillingness to deal with the crude oil and energy exports in Canada, I think, fundamentally curb and disavow loads of very obvious wins. If you're looking for foreign capital, oil. If you're looking to detach yourself from the U.S. economy, oil. If you want to solve climate change and help your allies in Europe, natural gas and mining, which you need oil for. You know what I mean? And so I think, you mentioned that if you want
to contribute to the collective security of Canada and its allies, critical minerals, right? Like Canada's contribution isn't tanks and planes. It's our inputs into like the military industrial complex of the Western world. The list goes on. It's such a good point, Richard.
Yeah, I just think but that's where I think, I mean, listen, my politics are very, very clear on this, so I try very hard not to spend too much time in it. But fundamentally, you've discussed a couple things, which is productivity, something I've gone on and on and on about. I mean, the 10-year compound annual growth rate of our GDP was 1.8. 1.6 of that 1.8 was population growth. 0.2% was productivity. One of the reasons is because of a lack of research and development spending. There's a section on research and development spending and sort of supercharging and those, supercharge or super productivity deductions or whatever.
Yes.
And there's a whole AI thing. I mean, you've mentioned that they recognize that as a problem. Do you see their proposed solutions as real ones? Is it fluff? I mean, does it avoid the obvious thing, which is energy? I mean, how do you feel about that?
I'll try to be as glass is half full as possible, because I don't think we should underestimate what a deviation from the norm it is for the government to frame the budget in macroeconomic terms and address these issues head on. I mean, one way, you guys are more economic experts than I am, but one way I've come to think about policymaking in Canada for the past several years is that although the principal challenges facing the country are macroeconomic, we've had a politics of microeconomics. We've had different governments in Ottawa, certainly in the province of Ontario, British Columbia, and elsewhere, who conceive of budgets through the lens of what am I doing for individual households. So that's a politics or a political economy of cash transfers, income supports, tax credits, etc. Here you have a government saying, no, the biggest challenges facing the country are slow growth, slow productivity, lack of business investment. And if we can get at those issues, they will translate into better outcomes for individuals and households. I think that's the right way to think about it.
I agree.
The question, of course, is do they have the right set of policies in place to deliver that macroeconomic growth? And I'm not sure, Rich. One, because as we've been discussing, it's relying too much on government, and that's a pretty big bet. Given, I think there's reason to doubt the state capacity in Ottawa these days. And then there is this trepidation around acknowledging, which is self-evident, that Canada's comparative advantages in natural resources in general and oil, gas in particular. And a government that won't acknowledge those realities is just going to have a hard time eking out more investment, more growth, more productivity.
John, I want to be respectful of your time, and there's obviously so much to get through on all this, but like the big one, of course, is oil and gas. people were looking for the emissions cap to be gone. It seemed like they didn't officially kill it, but it's sort of contingent on some carbon capture projects. Is that correct?
Yeah. The one way I've come to think about it is that the prime minister needs to find a way to convince his voters that if he approves a pipeline, it's a quote unquote green pipeline. And so I'm sure you guys are hearing the same speculation as I am. I kind of think come the Grey Cup, we're going to have an announcement out of Ottawa and the government of Alberta on some kind of grand bargain around approval in principle of a pipeline project, but in exchange for a bunch of public and private investment in CCUS as the kind of quid pro quo. And one thing that I struggle with about that, I'd be interested in your guys' thoughts about it, is that it doesn't represent in some ways a Faustian bargain for Alberta. One way to distinguish Alberta's economy from other parts of Canada is it hasn't gone down the route of what we sometimes call it the hub Laurentian capitalism, a capitalism that involves a kind of partnership with the state and private corporations do certain things in exchange for the government providing protection and subsidies and regulated profits. The Alberta economy functions more like a free market, not a perfect one, but more like a free market than other parts of the country. And so Albertans are so desperate in order to get a pipeline built, to get more pipeline capacity, that you get the sense that they'll accept almost any terms. And I worry a little bit that in this particular case, they're not reckoning with the fact that they may actually be the terms that they're accepting may be changing the kind of character of Alberta's economy and the Alberta advantage itself.
As part of the Laurentian elite, we like to call it crony capitalism, Sean. So please, could we?
Self-described Laurentian elite.
Yeah, well, I'm trying. I'm working on it.
But maybe though, I mean, it could be an easy sell, for the prime minister, a green pipeline. If you just frame it, I'm not trying to sound stupid here, but frame it so that people can appreciate. If you want to focus on carbon emissions, then, don't think of the Canadian border going just straight up, to the moon. Think about what's happening overseas. And if we are able to sell our energy to Asia or to Europe, we can help those guys reduce emission. That would help the world instead of just Canada. I think it's an easy thing for them to do. So I thought it was a good first step to at least introduce the conversation. One thing I love about us having, we all did our homework, of course, on the budget over the last, 24 hours, 40 hours, wherever it's been, and it's been bantered around everywhere a lot. But just listening to our conversation, a couple things that's really jumping out at me here now, just loud and clear, is that Ottawa has now said, hey, Canada is not going to grow from population and housing over the next 5 years, basically. Therefore, it has to grow another way. Yes. And the other way has to be the energy commodity world. Like there's nothing else that Canada is going to produce. And so let's see if we can, push that across the finish line, or at least get it going. But if not, Canada is, again, like we've had a bit of a concerned outlook for where Canada is headed. The housing market was going to do its thing anyway. We knew that was going to happen, but at least Ottawa has now come out and said, they implicitly said, this is going to be crap for the next 3 to 5 years. We need another way to, and again, you have to attract foreign investment into this. So let's see where we go next. But this isn't a budget that's going to save Canada. It's not going to be like hand holding, dancing across the hills and everything. But it's a very, very sort of unexpected budget that came out, if you understand what they've said. And I think this conversation has demonstrated that.
Sean, one of the biggest roadblocks to a pipeline appears to be BC's David Eby. He's been pretty vocal about it. He actually came out, I think it was yesterday, with the First Nations and saying, listen, none of these First Nations support it. We don't support it. And effectively over his dead body, is he going to get behind the pipeline? I don't know what your thoughts are on that. I think I imagine that's one of the biggest challenges is appeasing all these provincial governments, but also the First Nations, which continue to seem to have a stronger and stronger voice, or stronghold really on the investment decisions that can be made.
Yeah, I think this is a defining question for the Prime Minister. If my instincts are right and we do see some announcement in and around the Grey Cup with Premier Smith, then the Prime Minister is going to own this. It won't be enough to say, I'm inclined to do it. He's going to have to take the steps to make it happen. And that includes possibly putting himself in tension with the BC Premier. Up until now, the Prime Minister and his Energy Minister, Tim Hodgson, have been inclined to say this is a matter for the governments of BC and Alberta to work out. But your astute listeners and viewers know that's not right. That under the Constitution, the federal government is responsible for interprovincial infrastructure. In fact, one could go so far as to argue one of the principal functions of a national government in a federal state is authority over interprovincial infrastructure. So in that sense, I think we are heading towards some type of collision between Premier of Alberta, the Prime Minister, and the BC government. And the question, of course, is because at the end of the day, this is all politics. What can Alberta and Canada put on the table that gives Premier Eby a win? What does that look like? Does that look like a revenue stream or an income stream? Does that look like transfer payments? I don't know. But Mark Carney, in some ways, Mark Carney's prime ministership will be defined on, in the face of that type of resistance, is he prepared to do what it takes to get that project approved and ultimately constructed?
Money. He wants money. I just have one question. I know we forgot to ask it, by the way, which is surprising. How did you feel about the accounting, let's say, trickery, for lack of a better word? Just as a policy sort of wonk, as somebody who's been in those weeds, do you respect it on some level, which is, I admit, kind of reluctantly do? Do you think it's bullshit? Do you think it matters to the voters or not? I mean, how did you the whole capital versus operating thing?
Yeah, I was really worried, guys, through the spring. What precisely was going to happen here? Was the result going to be such that it obscured Canadians' capacity to understand Ottawa's fiscal picture, particularly on a longitudinal basis? That is to say, could we compare year over year? Because other governments in Canada have gone this route, have done it purposefully in the name of obscuring or conflating their bottom line. The province of Alberta several years ago, for instance, was chastised by the provincial auditor general for precisely that reason. And so in the end, it's hard for me to get too exercised about it because, well, the budget presents capital and operating and all the rest. At the end of the day, it does consolidate the books. So Canadians and markets and others can do an apples to apples comparison. So in that sense, it strikes me almost more like a political exercise, Rich, than like a fundamental accounting one. And in that sense, it'll be a conversation that energizes and interests some people. But, my dad in Thunder Bay is not parsing the difference between a transfer payment to the provinces for social services and a transfer payment to provinces to build a hockey rink. As far as he's concerned, it's money coming out of his pocket.
Okay.
Rich, is there anything else, Sean, that sticks out to you from the energy sector, critical minerals?
No, you mentioned the emissions cap issue. That's a big one. It's one, of course, that Alberta and the industry have been calling for some time. So that's interesting. I think we're gonna have another tranche of projects that are going to be part of the Bill C5 model. My sense is, guys, I don't know if you're picking this up in Western Canada, Steve, that a lot of the industry were prepared to support C5 in the spring on the grounds that they were glad that a government was thinking and speaking in terms that they had been for some time. But a lot of them, I think, saw it as a down payment on a broader reform agenda, as we were discussing earlier. Here we are now in November. There doesn't seem to be much movement on getting at the root of the problem. And in that sense, I'm starting to sense some agitation in the industry. Because of course, as you know, we have 5 projects so far, some others in the queue. We may have some others on the day of the Grey Cup if my sources are right. That still means the vast majority of projects are going through a system that the government itself implicitly acknowledges is broken by virtue of having to build an entirely parallel one. So in that sense, I don't know. You wonder how long it is before we start to see industry raise its elbows a bit, if I can use that metaphor these days, when it comes to the Carney government's real commitment to kind of free up capital to get these projects moving.
So just to clarify, you're of the opinion or of the view, or at least that's what you're hearing through the tea leaves, is that there could be a pipeline announcement for the Grey Cup, which would be November 16th for our listeners that aren't following along. Is that correct?
Yes. I've heard that speculation for some time. I've seen some reports along those lines today. It's a lot. It's intuitive to me, Steve, because what's interesting is through all of this, I'm sure you've noticed, like I have, that Premier Smith in Alberta has kept her powder dry in terms of criticizing the Prime Minister and the government. When the first tranche of projects came out, and none were major pipeline projects. In fact, a lot of them were projects that were already underway in different parts of the country. She didn't say anything. She hasn't said much, even as the government has kept the emissions cap in place. And so I can't help but think that her silence was strategic, and it was in the service of getting some type of deal on a pipeline that, as I say, I think could come as early as the day of the Grey Cup.
That'd be a big change. I mean, I guess my next question for you is, assuming that is what we all are anticipating, you seem relatively sort of cautiously optimistic about the budget. Is sort of my takeaway. I could be wrong, but do you think this was, so what's the likelihood this budget actually gets passed then? I mean, do you have an opinion on that?
I think it's pretty high. Yeah. As of today, we're speaking at 2:50 Eastern on November 6th. To my knowledge, we still don't have full clarity on what the NDP intends to do. But between the combination of the New Democrats, who clearly don't want an election at this point, guys, I'm not sure the NDP, in all seriousness, could execute a national campaign because of financial constraints. Between the NDP and these ongoing reports that next week we may have more floor crossings from the Conservatives to the government, my sense is that this is a budget that ultimately passes, and the government gets to live another day. I think you're right in a way, Steve, to characterize my reaction is tilted slightly positive. Maybe that's in relative terms. I'd grown so underwhelmed by the Trudeau government's kind of economic worldview or philosophy, if I can put it that way. But I come back to a point that I've tried to make over the course of our conversation. I do think that this is a prime minister who, he clearly thinks in economic terms, has, I would argue, a view about the state's capacity to engineer particular economic outcomes that relatively efficiently and with few distortions, that just bucks up against reality in my mind. And so in that sense, its diagnosis is right. I think its solutions will be put to the test, and it will ultimately come down on whether the government in Ottawa is up to the challenge of delivering on what is a pretty sweeping agenda, from some of the tax measures we've been talking about to carrying out some of these projects and working with other orders of government to deliver on public infrastructure. This is a government that not that long ago couldn't issue passports or deliver the mail. So I start with somewhat modest expectations, I'd bet.
Before we go, I know you're doing super, super well at the hub. So congratulations on all your success. Are you happy that they removed the luxury task on private airplanes and luxury yachts? I was just wondering if you were going to buy a big boat and put the hub.ca on it, or
Yeah, no, I'm afraid, Rich, that's still not I'm still not quite in that tax bracket. But what I am glad to see, in all seriousness, is I'm allergic to class warfare. I think it's a wrong way to think about the economic challenges facing Canada's economy. The problem isn't too much inequality. The problem is that we don't have enough wealth in this country. And I'm sure, like you guys, I reacted really negatively to the rhetoric from the Trudeau government when they enacted, or when they committed to enacting, the capital gains tax increase back last fall. It wasn't just about a technocratic tax measure. This was one shot through with kind of value-laden arguments about the wealthy and all the rest. And I think one of the more admirable aspects of Prime Minister Carney's term in office is not only has he gotten rid of some of those policies that weren't really designed to produce better outcomes, they were designed to do wedge politics, but he genuinely seems committed to a kind of economic worldview that is about building and growing the economy. I have difference of opinion on how best to do that, but at least our politics is being recentered on the questions I think we should be asking of it.
As a parting shot to the Trudeau government, importing millions of low-skilled, low-wage laborers is probably the worst possible thing you could have done for working-class people. So, but I agree with you. I think you're right. It is quite refreshing that we moved away from that. Sorry, Keith.
Yeah, I mean, it's the same theme here. You know, we call it the Overton window. I think people know that that's that concept, of course. And what used to be an acceptable view or the way to do things, that's now, you know, the pendulum has come back to the other side. And it seems like we are getting that shift or that pivot in Ottawa. I'm not sure other places around the world have completely hung on to that. I know New York they're trying to hold on with all their might to the other way. But it's going to be interesting that's where we're headed. So, I mean, there are a lot of good things sort of coming out of the budget, but I'm a market guy, and I think that the clock didn't start ticking on Tuesday. I mean, this clock has been ticking for quite some time. So, I mean, the challenge Canada has now is that they're going to be able to sort of grind this out without something going off sides, either in Canada or elsewhere around the world. Because if we get some kind of a stressful event anywhere on the yield curve around the world, you know, this budget out of Ottawa, it gets blown out of the water. Like, there's no chance that this will take place. So if you're listening, Ottawa, get to it, man. Like, don't keep celebrating at the bougie bar that I think we saw the photos in.
I was wondering, do you get any money from do you get any of that new cash to the Canadian media companies?
Oh,
Sean?
Rich, I'm offended, man.
Throwing him under the bus, Rich?
No. It means that you don't follow the hub as closely as you ought to. One of our one of the motivating parts of the project is that we have rejected media subsidies. We are eligible for about $150,000 per year or more. Last year, in fact, we received funding through Bill C-18. This was a legislation that mandated Google make payments into what's called the Canadian Journalism Collective, and we donated our share. We think that the industry is in desperate need of the process of creative destruction, and all of the subsidies are doing is locking it in stasis to the detriment of the industry and, of course, to the detriment of Canadians. So the most disappointing aspect of April's election outcome wasn't partisan. It was that the subsidies would remain in place. It means that our competitors are receiving 50 cents on the dollar for every journalist whose salary is up to $85,000. It represents a huge distortion in the marketplace. And yeah, we're proud not to take those dollars, and we think counterintuitively it is to the betterment of the hub, that it forces us to be more responsive to markets, to be more hungry, more innovative. But man, it would be nice if they got rid of them.
Sean, we should say the Loonie Hour has also not taken a dime.
Here, 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 here.
Although we would gladly accept it. No.
Yeah, how do we get that 150 grand? John, I think that's a great place to end it. Super, super insightful. We're very grateful for you to come out here and take your time and obviously educate our listeners. So we'll have to have you on again at some point in the future.
Yeah,
we've been following your work for a long time, and the hub is tremendous insight.
That means a great deal, guys. We'll have to do a crossover episode soon, because similarly, we're big fans of the economic analysis that you bring to bear on these big questions. There's not enough of it in Canada. Incidentally, one of the consequences of dislocation in the media is a lot of outlets have basically laid off or let their business and economics capacity atrophy. And the fact that you guys are doing it so well, in a way, is a proof point that you don't need subsidies, you don't need legacy media to get top-notch business and economic analysis on matters of public policy. So thanks for letting me sit in, and I hope we can do this again soon.
Thanks so much, Sean. Keep up the good work. Great interview with Sean there. The whole time he was chatting, I was kind of thinking about like the conversation we had pre-election with Doomberg.
Yep.
Which was like, Mark Carney is going to change, despite his book called Values, he's going to change his values and will build a pipeline. So it'd be interesting. Grey Cup. I mean, it's a couple weeks away. We should have a Twinkie bet
on the Grey Cup,
on the oil pipeline.
Oh, on the
yes
oil
or
pipeline.
No?
Oh yeah. Apologies to all the people in the comment section who gave me shit for the Twinkie. I promise next time I'll have a Twinkie. I thought it was a really good conversation. I think it was really interesting to sort of hear his perspective on all the things that we've discussed. Really, there's nothing really I want to like pull out. I'm just really worried that these numbers that were being given, maybe I'm front running Keith's point, but I think the numbers that we're being given is the low end of whatever, or excuse me, the high end of whatever number it will actually be. I think it's going to blow through 80, 85 in
well, that's like,
no time.
Keith always jokes about it, which is true. Like, the federal government doesn't project recessions. The Bank of Canada never projects recessions, and then monetary policy reports. Like,
neither do
everybody. Always just assumes. Everyone always just assumes trend line, right? It's a safe way to do it, I suppose.
I mean, think right now, the best case scenario that they could have presented was 5 years of GDP growth between 1.25% to 2%. And that's assuming inflation, I think, Rich, is forecast at, they're using 2% inflation.
Yeah, the target.
Yeah. So if, let's just say inflation's 2.5%, you take that extra half a point off the GDP growth.
Yeah,
because it's a real GDP number, they're showing. So we'll see where we go. I'm not trying to be, the negative person here, but let's be realistic. Everyone who's listening, all of these 1, 3, 5 year projections, they never ever happen. So then you look at it instead. Okay, how do they surprise on the upside? It means global growth has to pull Canada out of it, because all this talk about investment versus spending, it sounds really cool. It sounds quite nice, and if you say it enough, like anything, you believe it. However,
I was almost convinced, Keith.
Yeah, I know you were, Rich. Yeah, but the only way for these numbers to do better, the rest of the world has to do better to pull Canada out of it, because these new policies or the change in heart that now Canada has, these aren't going to generate returns over the next 12 months, 36 months. Like, it takes a long time for this stuff to kick in. So for this to work, you need the American economy to go on gangbusters. You need the Europeans to go gangbusters. Money has to start circulating very quickly, and maybe we go down that route. But right now, the trend continues to deteriorate. I mean, for the sake of time, we don't have enough time to go into it, but a real quick 5-second summary. Most economic data coming out over the last week, since last week's episode, it continues to show deterioration, a grind lower and lower around the world. So that's, that's sort of my last words until we'll talk about it again, I'm sure.
Rich, you and I flagged this in the group chat before we recorded, but I thought I was going to ask Sean, but the conversation was dragging on. But OAS, old age security in this country.
Oh yeah, we forgot to talk about that. Shit.
Yeah, now accounts for $1 in $6 of federal spending, and I found that it was interesting in the budget. There's a note here in the Globe and Mail, it's like a little snippet. It says Canada claws back the Canada Child Benefit at household incomes above $81,000, but allows OAS, old age security, to flow freely until a couple makes $182,000. In effect, middle-income parents raising children are asked to tighten their belt, while retired couples with six-figure incomes continue to collect $18,000 subsidies. This is not shared sacrifice. It is a structural ageism against young people written into fiscal policy. I don't know. I found that it just kind of like highlights the debate of our time, right? Which is like the boomers with all the houses that don't want the density and the zoning, and then the young people that can't get on the housing ladder and they can't afford to have kids. And it creates these social frictions because the social contract has been effectively ripped apart. And I actually think
gets voted.
Yeah, exactly. And this is like, we didn't ask Sean about that too, because he's actually.
But the irony, of course, the party that's been trying to close these gaps are the ones that just made it wider and wider.
Yeah, of course.
Yeah, it's just.
Sorry, Steve, I interrupted you, but you were making a good point about this balance that's off kilter.
Well, no, I think it's going to be, and I think that's it's disappointing to see, obviously, the continued divide, I think, between like political views on the left versus the right, and it seems like seemingly nobody can agree on anything anymore. And I think so much of this has to do with, as Keith always mentions, just the system kind of breaking down, and like, yeah, this widening of political views, and I think is ultimately just a symptom of that system breaking down.
Yeah, I think that's well said. Very well said.
Keith, did you see but it will be interesting. Just last in that Zoran Mamdani. So it's making all the financial media headlines because Wall Street's freaking out. But effectively, he's the new mayor of New York, and so he pulled no punches to basically say, "Listen, I am a gleaming socialist. I'm not hiding it. This is his views." Just to give you an idea of the policies that he's proposed: citywide rent freeze, immigration and sanctuary pose. He's also proposed free public transit. He's proposed state or city-owned grocery stores. I don't know. It's going to be really interesting to sort of see.
Quebec got a shout out. He referenced Quebec's childcare program as a model for New York City.
It's going to be interesting.
Yeah, it's so. What I'm hearing from this is two things. I already know. People may not realize this, but if you're a trader on Wall Street and your firm has, they'll have an office on Wall Street or the Wall Street area, and then another one in New Jersey. It's your goal all the time to live in Jersey, but you're taxed on where you're working all the time. So most guys, they try to work the fewest amount of days possible in New York. Instead, you want to be over on the New Jersey side, because taxes are high in Jersey, but not nearly as high as it in New York. A lot of money is leaving New York, guys. It's going down to Texas, Nashville, Miami, those places. But the other thing that's going to happen now,
well, Keith, like the old adage, right, is capital flows to where it's treated best.
Yeah, absolutely. But one last thing, I know we're sort of running along today, but now with this new mayor in New York, it just sort of gives more, it just re-energizes mayors in other larger cities. I think we have some here in Canada who have, they've adopted sort of the same views. So the moment they believe there's success happening with this in New York, they'll become even more energized to put even more of it in Canada. So we know there are some cities that have that. Audience are saying, "Yep, we know which one that is." So we'll see what happens there, and of course that'll just force all the money in Canada to flow to Saskatchewan.
Red
Saskatoon, the new Bay Street of
That'd
Canada.
be awesome. It's too flat. There's no skiing in Saskatoon, I don't think. Anyway,
All
Okay,
right,
guys,
gents.
let's wrap it up. Energy. We'll get ready for next week.
Always a pleasure. As always, we got a string of guests here that we're lined up for the back half of the year. So lots more to come. Cautiously optimistic was our guest on the Carney budget. Let's wait and see. There's so much to be unveiled. Keep an eye on the Grey Cup, not for the winner, but for the pipeline. And as always, we'll see you next week.